Well, U.S. energy stocks are plunging today after the U.S. Senate panel, proposed phasing out solar tax credits by 2028 as part of U.S. President Donald Trump's so-called Big Beautiful Bill. For more perspective on this issue and the outlook for renewable energy stocks more broadly, we're joined now by Chris Dendrinos, clean energy analyst at RBC Capital Markets. Chris, thanks a lot for joining us. I am reading that the Senate panel, of course, removed credits towards the industry that affect the industry in a beneficial way. These are credits that were provided by the Inflation Reduction Act. That was a Biden piece of legislation. But I'm also seeing, Chris, that some of your peers, these are analysts at JP Morgan and Mizuho, are saying the new version of the bill is actually better for the solar stocks than the earlier version passed by the House of Representatives in late May. So sort this out from us. Exactly where do we stand?
Yeah, so I think there's two things to kind of keep into perspective here. One would be what were expectations coming into today, and then two would be a comparison of this bill versus the House bill and the original, I guess, call it the current bill. And the expectations to coming into today is where we were focused, and I think that's why a lot of these stocks are sort of underperforming today. Is in part because of expectations coming in. And I should say, I have a lot of respect for all of my peers and my competitors. One of a good analyst, that's my competitor, put out a note on Friday, kind of saying that the Senate bill was going to be a lot more favorable than what it was. And so I think a lot of the stock reaction today is sort of a give back of Friday's take, given that the language is less favorable than expected. Now, comparing the Senate's version of the bill to the House's version of the bill, undoubtedly, yes, the Senate's version of the bill is much more favorable. Specifically, the House had kind of early construction deadlines. You had a phase out at the end of 2028, and the Senate gives you a lot more runway to operate. Now, what the Senate does is they accelerate sort of the step down in these credit values, and that's sort of impacting some of the stocks today. But overall, I would say Senate's version is positive there, and then they also introduced some language related to foreign entities of concern and how much they can contribute to the build costs, and though that language was pared back some, and so it gives a lot more leeway to the industry. But overall, I'd say versus the current IRA, obviously negative. Versus the House bill, you've got a positive perspective on it from there. But versus expectations coming in is where the pinch point is, and that's why I think a lot of the shares are selling off quite dramatically today.
How dependent are these companies for their future sales and profit, the kind of things investors want to understand before they buy shares, on tax credits and beneficial tax treatment? The stocks, as you know, are down as much as 40% today.
Yeah, and the way to think about this is utility scale versus residential rooftop solar, and maybe starting with the utility scale solar. Look, the cost structure for solar and wind has come down dramatically over the past 5 years or so, and the cost structure of gas turbines and power plants has gone in the other direction, higher. And so on a standalone basis, depending on where you're at in the United States, because the sun doesn't shine identically across the US, solar can be extremely competitive on a standalone basis, and I think that puts them on favorable footing, especially given the cost structure of gas turbines, which has gone higher. And by the way, you cannot buy those gas turbines for delivery until 2028 plus. And so I think the utility sector, there's going to be some adjustment. There's maybe sort of a pinch point here where developers need to rerun the economics, but ultimately it could actually result in some sort of acceleration of development as you want to sort of run to beat the clock to get your field online. On the residential solar space, that is a more challenging space. There's a carve out for battery storage that could be interesting, but it's more complex. It varies region by region, state by state, and even utility by utility. And so, our perspective right now is, let the dust settle. Let's recalibrate the economics and see kind of where things fall. But I'd say focus on utility scale solar from here.
Okay, I'm just trying to I'm looking at my Bloomberg scene to see what your ratings are on these stocks. You've got outperform ratings on at least a couple, I believe. Sunrun is a stock that's affected today, and First Solar is affected today. Am I correct that you've got outperforms on those and have not changed them on this news?
Yeah, we have not adjusted our ratings yet, and our base case on First Solar would be a preservation of the credit. Now, interesting on First Solar, 70% of their business is storage plus battery. And so, there's reason to believe that they're going to be able to continue to collect the credit on 70% of their business. And, that 70% of the business also is over 70% of the economic value of the system. And so, it might not be as bad as perceived right now, but, as I mentioned, we're taking a step back and reevaluating things. We need to better understand just how much industry demand is going to be impacted by this. But, that could be a favorable outcome for them. And then for solar, it's interesting with First Solar, they're sold out through 2026, well sold out through 2027. And so, the near-term impacts could be more limited. Now, I think there's some debate on the pricing of panels going forward and whether First Solar is going to have to cut pricing. Some of our checks more recently have suggested that after some of the tariff duties and then duties specific to Southeast Asian countries, that solar panel prices in America were actually increasing. And so I don't think that was appreciated. And so maybe the pricing give back that First Solar might have to do is offset by panel prices that were potentially trending higher more recently. I think that demand for solar, could it be down 15% long term, maybe a bit more? Yes, but I also think that they're, as a domestic content manufacturer, with a well-solidified U.S. supply chain, positions them more favorably. And so there's an opportunity, I think, for maybe the market size shrinks, but their economics of their sales can continue, and they're the winner out of this on a market share capture. Okay,
so we're basically out of time, but very quickly, are today's share price collapses, do they present buying opportunities for longer-term investors?
Yeah, I think First Solar could look interesting from here. The residential solar, like I mentioned, we need to take a look at things. But, I think what's Warren Buffett say the best time to buy is when everyone is selling. And so I would be taking a close look at First Solar.